Hey folks, Shawn Plummer over at the Annuity Expert. In today's video, we are going to answer a common question we get, which is, are annuities FDIC insured? The typical folks that are asking this question are folks that are looking for what are called fixed annuities or multi-year guaranteed annuities, which multi-year guaranteed annuities are also known as on the street as a CD annuity. It looks, it feels, it works almost identical to the way a CD works. And where you get a fixed interest rate for a fixed period of time, and immediately they're thinking like a CD rate shopper. CDs, as you know, are notoriously backed up by the FDIC for up to $250,000 per bank or credit. And the credit union has a version of that as well. And they want to make sure that they're getting protected for the investment that they're getting. And so to answer your question, no, annuities are not FDIC insured. They're insured by the insurance company. Fixed annuities are sold by insurance companies. And so the insurance company is insuring your investment. And then in case that insurance company goes out of business, there's what's called a State Guaranty Association. State Guaranty Association is an association that requires every insurance company who wants to do business in that state to get some sort of reassurance in case of solvency or bankruptcy, right? So if the insurance company can't fulfill their promises, their contractual guarantees, there's this association that comes in to help meet those obligations and those guarantees. You can go to NOLHGA.com, NOLHGA.com, or you can just type in State Guaranty Association and your state Guaranty Association will pop up. And they work similar to the way the FDIC works, where they have a certain amount as a ceiling of what they'll guarantee. So FDIC does 250, some will do 250, some will do up to 500,000. Just depends. They change frequently, so you always want to check out before you buy an annuity. If you go to NOLHGA, you can go here, contact my Guarantee Association, and here's the list of them all. And then if you want to pick out, we're here in Atlanta, Georgia. So I'll go to my Georgia Life and Health Insurance Guarantee Association. And what you'll see is frequently asked questions. And, what happens when an insurance company goes out of business, how policy coverage is determined, who is protected, how much is protected, what type of contracts are covered. Let's see here. I'm going to look for the question that has how much they will do. But usually they'll have who is protected. Let's see. Are all policies? Okay. So are all policies fully protected? Not always. And it'll tell you here, insolvencies, which, by the way, there have been far fewer major insurance companies go insolvent than banks and credit unions across the United States. Like it's not even close. But go back to this. If you're post July 12th, $250,000 per insured life. I don't know why it does that, but every state will have some sort of number that will be insured. So check that out. What a lot of folks do that contact us, they'll go to our fixed annuity rate page and they'll say, hey, I'm in Georgia. I've got $500,000 and CD rates stink and I want to get a higher interest rate. But I don't want to put all $500,000 into one company because I want to meet the State Guaranty Association limits. And so what they'll do is they'll come here to our fixed annuity rates page and they'll also come to our annuity calculator page, which I'll show you in a minute, and they'll look at the different interest rates. Here we have the top A-rated companies. This is updated daily by a human. 5%, 5.2, and they may say, hey, I want to put 250 since that's the limit with the state of Georgia with Exonic, and I'll put the other 250 with a lower rated company because they want the higher interest rate at 6.30%. Okay. And then they'll know like, okay, these insurance companies will insure me and guarantee me this interest rate for this period of time. And in case that insurance company goes under, I'm within the State Guaranty Association limits for reassurance and insolvency. Same thing with retirement income or doing an annuity to distribute your retirement income. So they'll come to our income annuity calculator or they'll get a free comparison from us. And let's just say they have, $1 million and they want to start income in 5 years. And they'll say, okay, they'll look at how much income that they're going to get from that fixed income. So if you look here, this is a B++ in this scenario that is winning. So they're like, I don't want a B++ rated company, which is fair. Or maybe they're like, the income justifies it, but I want to split it up. So if they have $1 million over 4 different companies. So they'll put 250 in this B++ rated company, put another 250 in this A+ company, 250 in this A+ company, and another 250 here. And they're just like, okay, it's with 4 different companies, 250's the max limit for the SGA. So if one of these companies goes under, at least I'm not risking all $1 million, right? And we'll do 4 applications. We'll have 4 policies, and they'll get income distributed from 4 different sources. So that's kind of the train of thought. Going back, no, annuities are not FDIC insured, but are they insured in a similar fashion? Yeah, they are. So if you got any questions, go to your favorite search engine, type in the Annuity Expert, Google, Yahoo, Bing, and we'll show up. Give us a call at 770-755-1565, or you can leave us a chat, or you can shoot us an email. Or if you just want to get a question answered, leave a comment below. We'll answer it there, and then we'll leave the links to the interest rates here at Fixed Annuity Rates and the annuity calculator, and then we'll leave a link directly to where you can see your State Guaranty Association and click right from there and go there, and then you can contact them yourselves. Hope this answered the question that we get very often. We'll catch you on the next video and talk to you then. Like, subscribe, leave a comment.